Hey everyone, my name is Asia. Thank you so much for joining me today. Today is week 1 of our credit card series. For week 1, we are talking about credit card basics. So save and share this to whoever needs to learn about credit card basics, and don't forget to like, share, and subscribe if you want to stay up to date about our whole credit card series. So let's start off with the basics. What is a credit card? Credit cards are essentially financial tools that allow you to borrow money from banks or other financial institutions so you can pay for something. Instead of using cash or your debit card, you're essentially borrowing funds that you agree to pay back later, plus any interest or fees that you may occur. So with a debit card, you're pulling money directly out of your bank account, so you only have access to funds that are available to you in your checking account. If you're trying to buy something for $1,000 but only have $500 in your checking account, that purchase, honey, is going to be declined. When you use a credit card, however, you're borrowing money from that credit card company to make that purchase. And then when you pay off your balance, you're paying them back for your loan. However, if you fail to pay them back within the given time frame, you'll start being charged fees and interest, and your credit score will go down. Most of us in America were probably introduced to credit cards as a way to build credit. More on that next video. Unfortunately, when you make getting a credit card to build credit easy, like my first credit card, I'm pretty sure I got my first or second day in San Francisco in undergrad in 2005. So when you make it so easy for an 18-year-old to get a credit card, but you don't teach them credit card basics, that is where you get into the cycle of debt. You all know my story. Because let me tell you, the interest rate on those credit cards are not to be trifled with. In the third video in this series, I'm gonna help a few of you set a plan towards paying off your credit card debt. So if you are in credit card debt, don't worry, there's going to be a how-to video on how to help get yourself out of that credit card debt, but just know that you are not alone. Credit card debt is a huge issue, especially in America. If you do not pay your credit card in full every single month, that high interest rate of 20+% is going to keep you in the cycle of debt forever. But before we go into what is a credit score, how to pay off your credit card debt, again, let's get to the basics. Get out your credit card statement and let's go over some credit card terminologies that you will see in your statement. So this is my personal credit card statement. Whether it's a physical form or in a digital form, in general, your credit card statements are going to look pretty similar. You're going to have the main information about your balance, your credit limit, your available credit, and then on the bottom or somewhere, there'll be kind of a breakdown on your transactions. The first term we're gonna talk about is something that I've already mentioned in this video, and it is the APR. Your APR, or your annual percentage rate, is the annual interest rate on your account. This is the rate charged on any outstanding balance if you do not pay your statement balance in full every single month. This can easily turn a $50 purchase into a $150 problem if not taken care of immediately. So it is important to pay off your balance in full every single month. Again, if you are in credit card debt, do not worry. There's a video coming on how you can start managing your credit card debt and paying it off. But according to this statement, my APR for my Built credit card is 24.49%. They're really trying to get me. They're really trying to get all of us. So don't get charged interest by paying everything off in full. The next term we're going to talk about is credit limit. This is the maximum amount of money you are allowed to borrow on your credit card. This number is based on a bunch of different factors, such as credit history, income, and other debt obligations. So when I took out my very first credit card at 18, my credit limit was $1,000. And it stayed that way for a long time because I proved myself to be irresponsible with money for decades. But now that I have my financial ish together, as you can see, my credit limit for my Built credit card is $10,000. I think my other credit limit for my Amex is $12,000, and I think my Chase one is maybe like $15,000 or something. Not saying that to show off, just saying that your credit limit is based on a lot of different factors, and if you have your financial ish together and are reliable with your money, your credit card is going to start to increase. Just because you have access to $10,000 in my case doesn't mean that you should spend it. Stay under your credit limit to avoid fees and potential significant damage to your credit score. And in fact, again, we're going to be talking about credit utilization in the next video and how it's better for you to stay significantly under that credit limit every month. After credit limit, we have available credit. And as the name implies, this shares how much credit you have left to spend. This number is going to fluctuate as you pay off your credit card balance. So as of this statement, my available credit is $9,900. Again, I use Built specifically as a renter to pay my rent. I'm going to do a separate video about Built because I think it is very important. I think it's a game changer for renters, but just know that is the main focus of this credit card, main usage of this credit card. So at the beginning of the month, when I use this card to pay my rent, instead of my available credit being $9,900, it's only going to be $5,800. But again, I paid off that balance, so now we're at $9,900. So just know the lower your available credit is means you are getting closer and closer to reaching your credit limit, which again, we don't want to do. So now we're going to talk about the billing cycle. You can see right here, the billing cycle is the period between your credit card statements. During this time, you can make purchases and accrue charges on your card. And then here we have the due date. My payment due date for the billing cycle ending on April 12th is May 8th. And I am paying my balance on May 8th for purchases made in the April billing cycle. So I'm not paying for things that I purchased this month, I am paying for things that I purchased last month. Now, one of the more important terms in your statement is the statement balance. This is the amount that you gotta pay, basically. So according to this statement balance, I have to pay $88.66 by the due date of May 8th to avoid being charged interest. For me, I only use my credit cards when I know I can pay for something, and if I can't pay for anything, I just don't buy it, period. All of my credit cards are on autopay. And when you set up autopay, you should be able to choose if you want to pay off your minimum balance or your statement balance. And every credit card, every single month, my statement balance is on autopay. So I haven't paid interest since I paid off my credit card during my debt-free journey in 2017. Speaking of payments, let's talk about minimum payments due. This is the smallest amount that you are required to pay each and every month to keep your account in good standing. I say good standing because that's honestly relative. Because yes, paying the minimum is going to keep you from accruing like late fees, but you are still going to accrue interest. And paying interest is the thing that we are trying to avoid. Because by only paying the minimum debt, you are going to never get out of credit card debt and you're going to continue to pay for this purchase for the rest of your life. Even if you're not in a place to fully pay your statement balance, please, for the love of God, just pay above the minimum. Just with any debt, pay above the minimum so we can start making those changes towards becoming credit card debt free. So pay above the minimum as much as you can with the main goal of paying off your credit card statement every single month. So according to this bill, my minimum payment due is $25, but because we're being smart with our credit card debt, I'm going to be paying my statement balance of $88.66 instead. And that, ladies and gentlemen, is how you read your credit card statement. I try to break credit card basics down into mini bite-sized pieces, but let me know in the comments if you have any clarifying questions. But in a nutshell, to break it even further down, basically, don't max out your credit card. Only use your credit card when you can afford to pay your payment off in full and pay your statement balance in full every single month. That's the gist. I know that this is a lot of information and can be very overwhelming if this is the first time that someone has ever broken this stuff down for you, but you have a week. Okay, so rewatch this video, learn the terminologies, go to your credit card statements, make sure you're understanding everything that is happening with your credit cards, and come back next week. This is only a fraction of the journey. We're gonna talk about credit scores. We're talking about how to get out of credit card debt. I'm gonna share the credit cards I use, and then hopefully, once you get these credit card basics done and you can use a credit card responsibly, I'm gonna have a guest come on this channel to share how to use credit card points to pay for trips and such. I don't normally talk about credit cards on my channel because I don't want to encourage credit card use without people knowing how to use them responsibly. So this is the nitty-gritty of that whole journey before we can get into the fun stuff. I'm Asia Dane. Thank you so much for joining me. Please let me know if you have any questions in the comment section, and I will see you again for week 2 of my credit card series next week. Bye.